This is the Watchman giving a clarion call. Brothers, news is coming hot and heavy on the global scene, and the pace of deterioration is quickening. Have you ever seen those fire extinguishers encased in those clear containers with the phrase, "In case of emergency, break glass" on them? Okay, well, Beijing, which had been nervously standing near that glass container for several weeks, pretending that there wasn't even a fire to speak of, has just in the last few days finally cried uncle. They grabbed a sledgehammer and they shattered that thing. Now, why? What happened to cause Chinese officials to literally hit the panic button? Well, China's stock meltdown did kick off again last week. However, everything changed on Black Monday. Black Monday killed any and all notions of a global recovery. It did so much structural damage, technical chart damage, investor sentiment damage, in so short a space of time that it's now apparent that not only is the true economic picture an ugly one, but that central planners have just about run out of tricks, parlor tricks up their sleeve to deal with it. Now, how do I know that? Well, let's do a quick recap. First, Black Monday came and torched Beijing's line in the sand at 3,500 on their stock exchange. And that equity carnage was so bad, they've abandoned their hilarious line in the sand, which they said they were prepared to hold, quote, for years, no matter what it took, end quote. Well, years lasted about 2 weeks. Okay, they blew through hundreds of billions of dollars that they wasted propping up that market only to run off with their tail between their legs. But wait, it gets even crazier. For after giving up on propping up their stock markets, they immediately went on a rate-cutting spree, like some little kid running with scissors through a ribbon store, cutting everything in sight. They cut 25 basis points from their benchmark lending rate. Then they cut 25 basis points from their benchmark deposit rate. Oh, then they cut their deposit reserve ratio by 50 basis points. Then they cut their agricultural bank's reserve ratio by 50 basis points. And then they even cut their auto finance leasing company's rate by a whopping 300 basis points. Holy cow. I mean, this announcement means that Beijing has abandoned all pretense of order and control and declared to the entire world that plain old vanilla interventions are not going to cut the mustard anymore. Okay? But believe it or not, it gets even crazier. Okay, for just last night, fresh off the last renminbi devaluations on August 11th, Beijing has announced another fresh round of devaluations. They've spent over $100 billion to further ease credit in their economy. Yet despite all of these emergency measures, the Shanghai market still closed down again today. It still couldn't even eke out a positive gain. And just think, all this has occurred in just 2 days. Now, brothers, let me be clear here. This is an immediate, unqualified retreat from Beijing, the government with the world's largest currency reserves on the planet. And it should tell you everything you need to know, everything, about the true state of things behind the scenes. It spells disaster for the broad world equity market, okay, and world trade. Absolute disaster. In just the last 11 days, well over $7 trillion has exited the global stock market scene. Shanghai's stock market alone has given up 22% in just 4 trading days. This is total free fall, ladies and gentlemen. And the Dow? Well, Black Monday roughed the Dow up too, after roughly 1,100-point plunge at the open and a plunge protection team stick save, because there's no other way to describe an 800-point ramp higher off those lows in a single hour. They still ended that one trading day down 600 points roughly, and with a 4,500-point swing in one day. Completely unheard of. Bizarre. And just think, many tens of millions of people still have their life's work tied up in that index. Now remember, the last time the Dow caved in by 10%, the Fed quickly stepped in to, quote, save the day. Right? Well, in just the past month alone, the Dow is already down 14% from the top. 14%! In 1 month, mind you, and most of that just in the last week alone. We've already exceeded the previous losses, which sparked big policy moves from the Fed last time. So the question is, will they respond with more easing, and if so, how soon? How long do they risk waiting to maintain pretense of control? Because the longer they wait, the more damage is done, and the more expensive the QE measures will be to contain the fallout. Now, looking at the charts right now, most every major stock market is way oversold short term, and normally this is about the time where they'd all be due for a reasonable bounce. But be wary, because these are not normal times, and anything could happen. Anything. Now, China, they may have reached for the fire extinguisher, and they're pretending to be serious about tackling this. But folks, the joke's on them. Okay, these pathetic rate cuts will fail to stem the onslaught, the tide of losses, just as their comical pledge for a 3,500 line in the sand failed on their stock exchange. Nothing less than aggressive QE by Beijing, followed by 0% interest rates, or even negative percent interest rates, has any chance of buying meaningful time. Nothing. Black Monday and the global equity carnage and the disappearing credit are not some small house fire. Okay, this is the Hindenburg, folks. Okay, the global economy is ablaze, and I guarantee you the Fed is panicking right now as well. Why? Because they know that soon they'll be forced to respond in kind. And even many investors here in the U.S. are starting to realize that Beijing cannot possibly put out this fire. The Chinese and global equity markets, they're all coming unglued. They can no longer hide it. But you know what bothers me the most? Nothing has even happened yet. Now, what do I mean by that? Well, think about it. Back in 2008, these kinds of horrific equity losses didn't come until we were well after several bank failures. Several too-big-to-fail banks had already died last time before these kinds of losses appeared. Yet no bank has failed. There's been no sovereign bond panic. There's been no announcement of derivative troubles of any kind. Yet these seismic tremors are here, and they are growing louder. These harbingers are spelling out in plain terms that the recession is back on, that many trillions more in losses are coming, that further aggressive action by Beijing, including a likely QE and ZERP measure, are a lock. That further aggression from the Fed and other central banks with QE won't be far behind. But remember, it doesn't matter. No matter what they do, this ship, the global debt Ponzi scheme, Bretton Woods 2, this ship is going down. It cannot be saved. It never could be saved. The reset was always the end game. Sovereign debt, currency crisis, and defaults were always the end game. An enormous wealth transfer from paper and digital assets to sound money was always the end game. Yes, silver's $14.50 and gold is $11.30. So what? I'll tell you this. They could be taken even lower than they are now. Who cares? Who cares? These banking con artists will machine gun these lifeboats till the bitter end. But this equity plunge is an enormous wake-up call that end is coming, and soon. This is the beginning of the big one, and I urge you, don't